Hello, and welcome to myfinanceteacher.org. In this video, we're going to have a look at precious metals and the general stock market. And let's start with the US dollar. The average daily cycle duration in the US dollar is around 59 days. And within the last couple of weeks, we've seen a couple of lows on the US dollar, both just around 9 or 10 days on either side of that average. So while there is a chance that the daily cycle in US dollar did finish at the end of October, which would give us a daily cycle lasting for 50 days, there is still a better chance, I think, possibly around 60% versus 40% chance that the daily cycle in dollar actually finished yesterday with a slightly lower low and a daily cycle lasting for 69 days. Now, if the dollar finished its daily cycle yesterday, then it will be likely to rise for quite a while, maybe another couple of weeks, possibly going into that 95 based on the recent high at the end of September and the low back in March this year. A couple of weeks upward momentum before we see US dollar decline into the end of that daily cycle. This, I think, is pretty likely. And an alternative, less likely scenario with, say, 40% chance is that the daily cycle did finish back in the end of October, meaning that the ongoing daily cycle is already around a couple of weeks long. In that case, such a significant drop so early in the daily cycle is not really promising, in which case this bounce in US dollar will only be temporary. This formation on the chart over the last week or so would be more of a bearish flag. Possibly dollar would hit its head on the 50-day moving average over the next few days before dropping into the end of this ongoing daily cycle of the second scenario, which so far has already been going on for a couple of weeks. Whichever scenario plays out, dollar is likely to at least inch a little bit higher towards that 50-day moving average. And that, at least over the next few days, might actually provide some pressure for the precious metals. Now, looking at gold, unfortunately, previously I mentioned that we've likely seen the end of the daily cycle in gold back at the end of October, where daily cycle lasted for 35 days. It's close enough to an average duration. An average duration for the daily cycles in gold is about 1.5 to 2 months. Now, with yesterday's significant drop, I think it's more likely that the daily cycle all the way since the late September is still ongoing, which means gold is now in a daily cycle lasting for 47 days so far. It's actually closer to an average duration than the previous scenario of a 35-day long cycle. And yesterday's low on gold was lower than the other recent low back at the end of October. So it looks like gold is dropping into the end of this ongoing daily cycle. And I think the cycle didn't really finish yesterday, as I wouldn't really expect the decline to finish all within one day. So for that reason, I expect this cycle to continue for at least another few days, to give gold a chance to decline for another few days down into the end of the daily cycle. And that would finally give gold a chance to come closer to this 200-day moving average and come closer to that round number of 1800, which we've mentioned in some of the previous videos. Unfortunately though, back a few days ago when we saw gold break above the 50-day moving average, as I mentioned prior to that, with the break above the 50-day moving average, I did switch from holding GLD to holding miners to gain some leverage versus gold price. So with this possible decline in precious metals over the next at least few days, I'm still pondering what to do with my allocation to some miner ETFs. And in regard to my allocation to some particular miners, so far I'm not inclined to sell out of those, as the long-term outlook in some of those miners that I do like is pretty good, as I discuss in some of my public videos. And the short-term volatility in gold itself is not going to destroy the longer-term positive outlook for, again, some of the selected miners. Now, looking at miners, GDX is following gold down, but with GDX I think there is a pretty good chance that it wouldn't break the recent low back from the end of October. As with gold, we are likely very near the end of the intermediate cycle, and if decline continues only for a few days as opposed to, say, a couple of weeks, then there would be a good chance that GDX declines, possibly down to that lower Bollinger Bands, before bouncing back up without dropping below the recent low from the end of October. After all, the smart money that is tracking gold often uses ETF miners such as GDX for their investment decisions, which means that miner ETFs are sometimes a leading indicator, meaning that if gold is about to bottom relatively soon, GDX might have bottomed already relatively recently. Next, looking at the optimism index on gold. Again, if gold continues down for at least another few days, possibly another couple of weeks, it would be nice to see this optimism index finally come closer to at least 50 or maybe even lower, which would indicate a much safer buying opportunity. Yes, back in March, at the beginning of the ongoing intermediate cycle, optimism did drop only down to 54, but generally the intermediate cycle lows happen when this optimism on gold is much lower, closer to 30. So although I still do have some small amount of cash, say some small amount of dry powder, I am pondering whether to get out of the miners or to hunker down and wait for that upcoming intermediate cycle rally. So to help me ponder, if you share your opinion in the comments below, I think that would be quite helpful. I would appreciate that. Next, moving on to the general stock market. I still think that the intermediate cycle in S&P 500 did finish over here back at the end of September. Since then we've seen one daily cycle, which was very short, only lasting for 36 days. Usually these daily cycles in the general stock market last for a couple of months. And although yesterday we saw a significant drop again in the S&P 500 as well as gold, I think we are still safe in the ongoing short-term daily cycle, as it's only 11 days old today, and S&P was possibly going to just close the recent gaps, which it has actually done by now. So what I expect over the next few weeks is possibly some volatility, as some uncertainty about health concerns shakes the markets up and down within the ongoing short-term daily cycle. That will possibly last for another couple of weeks, most likely with the general upward momentum, as the cycle is still pretty young, and once the cycle comes close to the average duration of about a couple of months, we're likely to see a drop into the end of the short-term daily cycle. This sort of volatility without huge upside moves, followed by a drop into the short-term daily cycle, will actually repair this optimism index on S&P 500, which is now above red line. So over the next few days, a couple of weeks, maybe inching higher on this optimism index as well as S&P 500 itself. And that's when I will try to unload some of the positions that I'm holding both at myfinancesteacher.org and in my personal portfolio. And after that, once S&P declines a little bit, once optimism index comes closer to safer areas, I will again look forward to accumulate some exposure again. So that is the plan for the general stock market. And as I shared my views yesterday on energy with the members at myfinancesteacher.org, let me show you a brief extract from that discussion. Next, let's have a look at bankruptcies in oil and gas industry. We see that recently bankruptcies among explorers and producers have accelerated. We can see that more clearly if you look at the oil services companies, which have matched the previous high on bankruptcies back in the middle of 2016 at just under 30 bankruptcies just in the third quarter of this year, meaning that these bankruptcies are somewhat of a lagging indicator. Similarly to bankruptcies, number of oil rig counts is another indicator that might be of interest to you. Now, as you see, the timing of that discussion was quite fortunate, as after the video which was made before markets opened, yesterday and today crude oil increased by nearly around 10% or so. And of course, I'm pretty happy with our allocation to energy companies. If you want to see more details, join us at myfinancesteacher.org. You can do it by clicking this register button, where the first month is only $5 with $10 per month after that. For now, I wish you a productive day and good luck in your trades.